recession.
Yeah, I want to bring in Eddie Ghabour right now for our drive to the close. He's co-founder and CEO at Key Advisors Wealth Management. He joins us from Lewis, Delaware. Eddie, good to have you on the program today. We're seeing big tech take a little bit of a hit, potentially as a result of what we heard from Jay Powell, but maybe not, because some out there are saying, well, we didn't hear anything new from Jay Powell. Did we hear anything new from Jay Powell?
I think what Powell has basically said today is kind of indicated that the market may be pricing in too many rate cuts over the next 6 to 12 months. And I think that's what scared a little bit of tech. But at the end of the day, we've had a heck of a run, and a little bit of a pullback here should be expected due to seasonality and everything that goes along with it. But as an investor, if we take a step back and look at the big picture, the trend for rates from a monetary policy perspective are going to be heading down at a time when we're not in a recession, and we think acceleration of growth on the economy as we go to next year. So that's about as good as it gets for bulls. So any dips, in our opinion, if you have the right risk tolerance, should be bought, especially if you've missed this rally since April.
All right, so it makes me wonder, and I wanted to pull up the VIX and just see what's going on and what we're seeing in the volatility index. Not a perfect measure, maybe, but we are seeing it move up a little bit, but at just below 17. Complacency in the market. I mean, what could possibly go wrong? You think this is the best market set up in 30 years? Gets me a little nervous when everybody gets kind of excited here. What could possibly go wrong? Couldn't we see a recession? Couldn't we see Jay Powell saying we're at a really tricky point? It's hard to call what's the right move in this environment, and a lot of risk out there. 30, 40 seconds. What could possibly go wrong?
The biggest thing that could go wrong is the bond market, right? The 10-year bond, the VIX, and the dollar are the three main things that we're looking at. The VIX, as long as it's staying under 20, the 10 years under 4 or 5, and the dollar stays where it's at, and if people continue to be pessimistic and doubt this market, institutions are net short on a lot of areas, and this is why these dips are going to continue, in our opinion, to get bought aggressively, and this market's going to go much higher. It's the most hated bull market I've seen in my career so far.
Interesting stuff. Eddie, so appreciate it. And sorry for the short time. We've had a lot of news, as you can imagine.
You got to come back, though.
Here, coming at us. Eddie Ghabour is co-founder
Thank you for having me.
And CEO at Key Advisors Wealth Management, joining us from Delaware. Yeah, we're coming up on about 10 minutes to go until we wrap up the trading session, hovering near our lows here.